Well, IPOs like Twitter's today are beautiful when they work. That is when the stock opens smoothly and the price goes up. But it doesn't always happen that way. And sometimes after the initial flurry of enthusiastic buying, those shiny new shares sell off hard. Dominic Chu now with a lesson in the occasional madness of crowds.
Let's face it, most of us weren't in that select group of folks who got that coveted $26 IPO price for Twitter shares. An elite group of institutional investors and wealthy individuals were part of that action. So, should you rush in and buy shares of these hot IPOs whenever you can? After all, a lot of gains happen on that first day of trading. So it turns out, recent history gives us examples of reasons you might want to wait just a little while if you didn't get that IPO price. For instance, take Yelp. The online reviews company had an IPO price of $15 back on March 2nd, 2012. Yelp shares soared and closed at $24.58. That's a gain of 64%. If you would have bought shares at the closing price, your investment would have fallen in value by 6% just 1 year later. Then there's internet radio company Pandora. It rose by 9% on its debut back in June of 2011. If you would have bought in at the close of first day trading, you'd have lost 39% of your investment a year later. Same goes for Groupon. The online daily deals and coupon site rose 31% back on its first day in November of 2011. If you rushed to buy it at the close of the first day of trading, you'd have lost 85% of your investment just 1 year later. Professional networking site LinkedIn is the only real bright spot. Shares more than doubled on day one back in May of 2011. And assuming you bought at the close, you'd actually have made money a year later, a whopping 5%. IPO trading is often filled with volatility, and that's why many veteran investors tend to stay away from them.
I would never buy on the day of an IPO. That's just not how I work. I wait until things have settled out and, people have figured out what it really is and all the once the emotions come out of it, that's really the time I look to buy a stock like this.
And we all know what happened to Facebook. Shares lost half their value in just the first 3 months of trading. But it's worth noting that if you held on to shares of Facebook, Yelp, Pandora, and LinkedIn, you'd currently be making money. Groupon, on the other hand, is still trying to get back to positive. For Nightly Business Report, I'm Dominic Chu.